Chair Powell. Hi, Chair Powell. Thanks for the question. Going back to inflation, is the Fed behind the curve on getting inflation under control?
So I would say this. I actually think we are well positioned to deal with what's coming, with the range of plausible outcomes that can come. I do. And I think if you look at how we got here, I do think we've been adapting to the incoming data really all the way along, and noticing and calling out that both the effects and the persistence of inflation, of bottlenecks and labor shortages and things like that. So we've been calling out the fact that those were becoming longer and more persistent and larger. And now we're in a position where we're ending our taper within the next, by March, in 2 meetings, and we'll be in a position to raise interest rates as and when we think it's appropriate, and we will, to the extent that's appropriate. At the same time, we're going to be seeing a few more months of data. I don't actually think we're out of position now. I think this was an important move for us to make. I think that the data that we got toward the end of the fall was a really strong signal that inflation is more persistent and higher, and that the risk of it remaining higher for longer has grown. And I think we're reacting to that now, and we'll continue to adapt our policy. So I wouldn't look at it that we're behind the curve. I would look at it that we're actually in position now to take the steps that we'll need to take, in a thoughtful manner to address all of the issues, including that of too high inflation.